Affirm stock surged on Friday, hitting plus 18% before closing the day at $17.79, as Wall Street analysts were divided on whether it's the right time to buy the stock after the pay later company shrugged off concerns about strains on consumers in its latest update. Both bulls and bears find things to pick out of its latest earnings report. Affirm's ability to grow revenue while keeping delinquencies rates falling is going to be a key factor moving forward. Now, some highlights from the earnings call. They include an increase in transactions on the Buy Now, Pay Later firm's platform, as deals with new merchants helped offset challenges from rising interest rates. The company reported $5.5 billion of gross merchandise volume, or the total dollar amount of all transactions on its platform in the quarter ending June 30th. It said in a statement late Thursday. The figure was 25% higher than the same period last year and beat analyst estimates. The company's Affirm card also gained traction. The company also said revenue increased 22% to $446 million compared to the same period a year ago, which also beat analyst estimates. Merchant count increased 8% to 254,000, and consumer count rose 18%. Affirm and Amazon.com announced in June that U.S. retailers using the Amazon Pay service can now offer pay overtime options for purchases of more than $50. Partnership was rolled out to increase sales and customer loyalty. Now let's look at this video clip from the CEO before we continue with the analysis.
Tell us about how sustainable this is, this transaction pickup. Does that last into the next quarter?
Well, we did release guidance for next quarter, so we're feeling fairly optimistic, as you can tell in the numbers. As much as I'm enjoying the stock market reaction, we're very focused on the long term. So our goal here within Affirm is to keep scaling. We're very excited to be able to deliver some excellent results this quarter, fiscal year. We beat across the metrics, and so we'll just keep on doing what we're doing. We are definitely energized by the growth, and in particular, the growth of the card product. We worked very hard for quite some time to deliver just a really innovative product with this Affirm card, and it's finally showing real signs of stickiness, and just very excited about that.
Max, we note the guidance, listened in on the call. Respectfully, nothing out of the ordinary. Your stock's up 29%. Why do you think the stock is up so strongly?
If I knew how to predict market movements of my own stock or any other stock, I'm sure I would have a different job. I just know how to build good products and write software, and that's what I'm going to do.
Nice answer. I love that. But talk to us a little bit about that card. You led us there. And the fact that consumers in this moment are looking for different ways to be able to pay. Of course, they're able to pay in a normal debit transaction, but also then decide after the match whether or not they're going to be paying in installments. How is that pickup growing across the United States and North America?
So there's a real generational shift. I think the notion of just put it on your plastic, think about it later, something that worked for the generation that came perhaps before mine. But the ones that are coming after mine are very differently minded. They do like to know when they're done paying off the things they borrowed for. And this idea of packaging it all into a single card where you have a very crisp choice between paying now or paying over time, having the opportunity to make the decision a priori or after the transaction, which is what our card allows you to do, and not having to learn too many new concepts is just really, really powerful. Buy now, pay later, the last 10 years, we kind of started the movement, really penetrated the younger generations, and yet still it's less than 1% of the total addressable market, but no one's ever packaged it into a single elegant card that just allows you to transact the exact same way you always do, be it at a grocery store or online or wherever in between, and have full access to both buy now, pay later functionality and a simple pay now functionality. And that's what this card is. And the demand is great. So we can see that consumers are using Affirm in store almost an order of magnitude more with the card than before they get it. The transaction frequency is already 3x between the card and non-card. And so it's just clearly the product market fit that we've been looking for.
Max, your CFO, Michael Linford, acknowledged that actually 2023 has been really hard for Affirm, but clearly things have improved and got better into the second half of this calendar year. What specifically has changed, either in the environment, in the consumer, or in your product?
I think we operate and think and act in longer increments than perhaps the impatient stock market wants us to, but we refuse to cave to the quarterly game. Instead, we think in years and ideally in decades. And we started planning for the results of today a year ago. And the fact that we're able to deliver on them now is just predictable perhaps, but a huge response and result by our team. The volatility of the interest rates all through last year, the fact that they moved up as quickly as they did, quite unexpectedly, made it difficult for our capital market partners to decide how to price our product. Now that things are a little bit more stable, we're able to execute that much better.
I'm just going to ask a poker bear one at the end, with Jefferies coming out saying results are driven by a combination of higher interest income and indeed lower expenses, so nothing to do with technology or growth. What do you say to that?
I think people are welcome to judge our results, but they're pretty strong. And so I think that they speak for themselves. That said, I spent majority of my time worrying about our technology, staying up long hours working on the card, making sure the card scales as well as it does, finding efficiencies in every place, like customer service to response time of our checkout. The only thing that makes this company tick is our excellence in technology. So I fundamentally disagree with nothing to do with technology.
All right, big picture, we can see that Affirm did hit a low. We'll just say at $9, and that low was defended by buyers through the first half of the year before price surged higher. Price did come into a support resistance band on the monthly chart at about $14. Let's go down to the weekly chart. It might not look like it, but the momentum is to the upside now, just based on the simple 13 and 26 weekly moving average just pointing up, and you did have a crossover. 13 now is above the 26 weekly moving average. And this band that we saw on the monthly chart is holding at 14, as demonstrated by last week's price action and then this week's price action. Now you do have all these wicks here, which indicates selling pressure, but the liquidity may be further up near the $22 level. Now something to note, you see this huge spike here? It wiped out any remaining unfilled sell orders. So if price was to get above these wicks, I don't know if this level is going to hold any longer. Going down to the daily chart, another reason why this monthly support band held is you had the 200-day moving average serving as dynamic support for price action. Now I do anticipate more momentum to the upside, but that momentum is going to wane as it gets close to the round hole psychological number of $20. So if you're in the stock already, that would be an opportunity to take some off the table if and when price gets to the $20 level. Thanks for watching. Subscribe. Please like the video.